What if a financial firm operated in plain sight for nearly 2 decades, handling billions of dollars, without proper oversight, licenses, or transparency? That question lies at the center of one of Jamaica's most puzzling financial unravelings, the collapse of SSL. From the outside, SSL looked like a functioning investment firm. But according to investigators, what was occurring beneath the surface was far from legitimate. Authorities now describe a sophisticated, long-running scheme that may have involved nearly $5 billion in irregular activity, a web that required painstaking forensic work to unravel. One of the first red flags investigators uncovered was regulatory non-compliance, persistent, systemic, and glaring. Senior executives were charged not merely with paperwork errors, but with operating a securities business without a dealer's license and failing to register critical entities with the Financial Services Commission as required by law. In essence, key operations were conducted outside the legal frameworks designed to protect investors. But the story doesn't stop at regulatory missteps. The alleged violations span several pillars of Jamaica's financial legislation, from the Securities Act to the Bank of Jamaica Act, the Banking Services Act, and even the Larceny Act. One former CEO now faces charges under the Companies Act itself. This level of statutory breach suggests a culture of disregard for the very laws meant to govern financial markets. Perhaps most alarming are allegations that investors were knowingly and fraudulently induced to place their funds with SSL. If proven, that means individuals were drawn into investment schemes under false pretenses, the systemic failure of disclosure and ethical conduct that strikes at the core of investor trust. Investigators did not conclude this probe quickly. Unwinding 17 years of financial activity, interconnected entities, and opaque fund movements required coordinated intelligence efforts across MO. Investigators did not conclude this probe quickly. Unwinding 17 years of financial activity, interconnected entities, and opaque fund movements required coordinated intelligence efforts across multiple agencies. Related entities such as Delta Capital Partners Limited and SSL Growth Equity Limited have also been charged, complicating the picture even further. Law enforcement has said the complexity cannot be overstated. Think of it this way: imagine a bank that's never been inspected, never held a valid license, and never been required to follow basic financial rules, yet continues to accept deposits. That was, in many ways, the environment in which SSL operated. The SSL collapse is more than a single corporate failure. It raises urgent questions about regulatory enforcement, corporate governance, and how deeply systemic financial misconduct can remain hidden before it finally unravels.